TGIF, everybody. Hello, Kevin and Patrick and V and Tom. Takis, everyone have a good week. So earlier in the week, I asked non-subscribers which instrument they would like to look at, and we went with gold. Gold was here. Both Grega and Nick had buy zones around 1270. The low was 1267. Now trading up here. Good for 20 bucks. If you took it to heart, took it seriously, and took some action on that. So that was just one instrument. So good pick, Face. So this was early in the week when gold was under pressure and the dollar was popping. And here we are challenging these highs. Grega looking for a wave 3. So I'll give you a continuation analysis from Grega looking for 1315 for wave 3 up here. Have to crack this 1291 level for that to occur. So what a great call by Grega. And it wasn't just Grega. You know, Nick has caught the silver on the upside a few times. Okay. So going back here, Nick also has like a 1320 target on a harmonic. And then we go to Blake. Blake's been bullish gold since I've been here in April. He's showing the threatening of the breakout here. So we're right there. Are we going to get a false breakout or follow through? Also, you know, we were pretty spot on for that big break in the stock market last week, and obviously it turned out to be a failing rally. So good work by the ForexAnalytix team, by Grega and Nick and Blake and Stelios, and even Steve's work while he's on vacation. Blake backed him up on the candlesticks. So here you go, we're threatening up here. So the call was made on this pullback, little 2-candle pullback, and now on the verge of a breakout in gold. Also, Euro Yen, I have a litany if you want me to go through it. How you doing, Kevin? Everyone doing okay today? Also, 4.5 months into this Face, we're approaching 2,000 registered users of the Face webinar. 2,000. Hi, Craig, how are you? You got the right book now? Market Wizards? Craig's had a very nice recovery since joining ForexAnalytix. Hello, Kevin, how are you? So I don't do much on Fridays. Everyone knows that. And here's a tip. Hi, John. Don't try and make your week on a Friday, okay? If you haven't made your week by now, don't press and try and make it today. 1994, who? Oh, yeah. Get the original. Yeah. Get the original. That was a classic. You know, of course, Jack updates everything he does. You know, authors do that. They have different editions. Maybe they tweak it. But, you know, kind of like in the market, your original thought is usually the best one. You know, you have a thought for a trade, and then you start to second guess it or add on. Right? Okay, so let's take a look at the markets here. How many people took the gold trade? Just curious if at least 5 of you were there for this. I asked for the intelligence. Either you didn't agree with it or you weren't sure but it was pretty spot on. The buy point was only off by $3. So I'll tell the guys and the gals to clean it up. So I'm looking at Euro Pound here, guys, and we've tried it a few times. I saw something, sentiment indication on Twitter that 86% of the public is short here in Euro Pound. And then yesterday it held where Nick said it had to hold. So, and she was looking for new highs. So I'll be looking at this next week unless we take out this 90-60 level today, then maybe I'll take a Friday close. Otherwise, I think there's another chance for this wedge to extend a bit more. And that would take it up towards 91.60, 91.65. I think that was Nick's target from all the way down here. So this could be a good setup for next week. Maybe EG peaks on the eclipse. I believe the eclipse is Monday. Everyone ready to stand in the shadow of the moon, blocking the sun, going across the whole country. A throw over, Joachim? You could be right. So then you take it to 91 and a half, huh? This eclipse is the first one of this type to cover the complete continental United States in 99 years. 99 years ago, the U.S. entered World War I. World War I was going on for a few years, but we let the British and the French take it in the chin before we went over there to mop up. And we took hits, major hits in World War I as well. Just interesting that that was the last time that happened. Not that I'm saying there's going to be an outbreak of a war because of this eclipse, but you know, sometimes I know, you know, Blake's probably going to, you know, laugh at me, but you know, just like chart patterns, the whole universe is basically math. You know, that's how people who study physics and everything, the whole universe has an order and it's mathematical. So that includes when planets, eclipses happen, planetary formations, cycles. So although it seems strange, pay attention to when there's lunar eclipses, solar eclipses. I know W.D. Gann was a big proponent of it. And I really do remember quite a few inflection points on solar eclipses with the dollar. You know, I remember a major high in the dollar on a solar eclipse. So next week should be pretty interesting. So that's EG. I'm going to wait and see. Maybe it's an eclipse short next week. So there were a few successful scalps, but that's why, you know, we tried it here. It worked for 30, 40, 50 pips. Same thing here. Tried it here. And on the spike low, you know, most covered. I know Dan Norberg took 70 out of it, this range. So looking for one more push up there. Okay, everyone with me? I'm looking at the euro here, and the 1 hour is pretty interesting to me. This was a pretty nice non-confirmation, but I'm thinking there's one more shot down in euro. And yesterday Nick was talking about 1620. Blake's been talking about the same area. Everyone remember? I know you guys don't have the same kind of memory that I do. I mean, I remember everyone's trade. I don't know why. Can't remember mine. But maybe we end up with something like this in euro into next week. One more shot down. And, you know, now I have it coming in right around the 40 level into next week. So down here, I want to try the long side of Euro USD. Yes. Gosh, it was Jeff Cooper. He's at Jeff Cooper Live. You meet the guy that has a GAN wheel. You could buy his GAN wheel for $500. Tell him I sent you. But you know, Jeff Cooper also talked, although it's taken a little bit of time. His number was 80 in the S&Ps, right? So people probably went, oh, you know, there's another bear predicting the top. It's been happening for years. And also Larry Pesavento was there for the turning point. I did an interview with Larry that day right here. But Jeff Cooper was on. He was talking about 2480, and we played with the area, had one spike, and now here we are. So I don't know, are they going to hold again, you know, have a quiet Friday and then rally up one more time? Just check the 2-week off number. And so it's still we've had 2-week confirmation off numbers. Last week we turned down when we were under 71, and this week's off number, I don't know if you guys are using it, was 73.70. You know what this week's high was? Look at that. 73.60. So if you did your homework and you had you had it written down, there's a possibility you wouldn't have been afraid when you saw this big rally that we had, the big relief rally that we had on Monday, because there was no nuclear war. This is what I'm talking about. And then you had the off number to play twice. It's such a simple method. I'm giving it away free. I've given a lot away free over the years. Yeah, Blake's here. Are you already bored with me, Martin? Huh? You won't hurt my feelings. And Steve will be back Monday.
No, I think Steve is going to be back earlier.
Oh, look, God, you like a ghost.
Thank God, I'm checking out. Bye, Steve. Bye, Dale. See you guys. I'm out of here.
All right, are you out of here? Blake,
welcome back, Steve.
You're leaving anyway, buddy.
I am. But I'm still here today. I'm just happy to hear Steve's voice.
Same here. Happy to hear my voice. I try to speak as little as possible during vacation.
That's a great one, man. You love to talk, man. It's okay.
Yeah, but I had too much of it.
Steve took a trip, and now he's going to be an introvert. What do you think? Now he's going to become quiet.
Steve,
like Stelio.
Tell us about your trip. Did you get some good R&R? Rest and relax.
Yeah, as much as possible, you know, with a 16-month-old child. If it wasn't for him, I would have completely relaxed, but you know how it is. I mean,
you know what I would have done? I would have just taped up the sharp corners and then put a bowl of water and some cereal there and then just took off.
Yeah, it's funny.
Just kidding.
Steve's not sure about whether fatherhood was a good decision yet.
No, I'd say, you know, there is no doubt that it's a good decision, but you know how it is. I mean, seeing it from, from purely mathematical perspective, you know, initially. Yeah,
you having a kid on a demo account is different than having a kid live, huh?
That's one issue. But on the other hand, you know, I can tell you that if you take the sentiment away, obviously, you know, being a parent of a young child, you know, initially is more of a burden, you know, than anything else. But the more it grows up, you know, month by month, the burden becomes less and less, and the return having to do, you know, with you know, growing up, giving you, you know, feedback, starting to actually being able to communicate, etc. You know,
is that true, Blake? Blake, I mean, look, you know, I'm a stepfather, And I know that it's hard to raise a young child, but I came into the picture when I had 3 stepchildren in their teenage years.
Yeah, I was gonna say,
It
wait till
didn't seem much easier.
no, wait
for
till
my
they
wife.
become teens.
Yeah.
The back talking right now is pretty substantial.
They know everything and you know nothing, right, Blake?
Oh yeah, the conversations at the dinner tables are quite interesting, and you're gonna have a lot of fun with that, Steve.
Yeah, Steve thinks this is the hard part.
You know, from what I hear about Steve's child, about how he's maybe more of a perfectionist and likes to get things right and gets frustrated. Oh yeah, just wait till he becomes 13. I'm gonna tell you.
The apple doesn't fall far from the tree.
Right.
You hear that?
So, so Steve, you had a nice break. Welcome back.
Nice to be back.
And I'm sure everybody's going to be really excited to hear your analysis next week. We're switching trading places. You're going to be helping out next week as I'm gone.
Definitely.
Which one are you, Eddie Murphy or Dan Aykroyd in Trading Places? You said you're good at trading, huh?
Oh, good at trading places. I would be more Eddie Murphy, for crying out loud. But hey, Steve. So were you able to keep your eyes on the market while you were gone, or did you just completely Because for me, I'm gonna be keeping an eye on the market, but I'm really not gonna be trading. I might have depending on how today works out, I might have a couple of trades working, but overall, I'm gonna stay pretty quiet. How about you?
I was monitoring the markets like a few times per day. I was doing some analysis, during night, like 15-20 minutes, to whatever needed, some changes in the daily. So yeah, I'm pretty familiar with what has happened, but no, I wasn't trading.
So from somebody who had been taking a step back, kind of periodically looking at the markets, what exactly have you been, what have you noticed? What's stuck out that you've seen for somebody who's just kind of looked here and there? Any major developments? Because there has been a couple this week, but what have you seen?
Listen, the yesterday's again sell-off in the markets. I think it was.
And Dale, I'll take the screen.
Yeah. Go ahead and take the screen, Blake. You go first, anyhow. I'll be here. Listen, I think that yesterday's sell-off was coming. I mean, you could see it coming. It's obvious that I focused more on the political developments. It's obvious that Trump remains under pressure. And I think that the sell-off yesterday, following the terrorist act in Barcelona, was simply, just a reason for the markets to sell off once again. I really don't think that under normal circumstances the markets, especially the U.S. markets, would be hit just because there was a terrorist act in Barcelona, because we've seen much more impactful things happen during other periods, and the market completely ignores them, especially since they're not in the US. So I really believe
it's
that
Trump related.
Yeah, it's completely Trump related. I mean, the market needed an excuse to keep selling off, simply because, as it's obvious, I'm not going to be a political commentator here, but it's more than obvious that there is a lot of disbelief in the ability of the current administration to follow through their promises. And I remind you, to the audience, that there is a lot of the rally that followed the US elections that was based on the premise that Trump can push forward a political agenda which includes many pro-business, like the tax plan, etc., measures. So if the market has come to the point that it completely doubts its ability, Trump now disbanded the two of the cancels and he didn't follow through with creating a third one, it's obvious that the business people do not show so much trust, and as it seems, they don't even want to connect their names with
They
Trump.
quit, Steve.
Yeah, that was
they quit. They were all resigning. It's kind of like.
Yeah. He disbanded it, so he doesn't have to go through seeing everyone.
I quit, so you're fired.
Yeah, exactly.
But I think this is a very big development for the markets, and I think that was, the guys that I talk to every day, who I trade with, they're some of the most savvy equity market traders I've ever met in my 23 years of trading the markets. These guys are, they looked at the market 2 days ago and they're like, wait a second, why? I mean, you're disbanding the economic, team, I forget, the council. It's getting disbanded. Why do I want to own stocks right now? It's August. It's we got options expiration coming up. It's a crappy time of the year. Why do I even want to own stocks? And so yeah, you're right. Yesterday's sell-off in the market there was very good reasons behind it. So, but where we go from here, I mean, it's like, you think about it from a day-to-day basis, and it's like, okay, well, we found a bunch of support here. You can see that the S&P, like we're right on trend line support. I mean, we really are. But how do we act towards the end of the week here, and do the markets, do we get a continued sell-off? And I don't know. I mean, I think we're near a lot of support here.
We are, Blake, but on the other hand, if this support gives way, and I was one of the things I was doing the past few days is I was monitoring several of the indices at the same time, because I've often gone through the vast majority of them here in the webinar, because some of them are often leading. For example, I had warned people about IWM breaking through important levels way before the rest of the stocks, rolled over.
There's the Russell.
Yeah, and the Russell has now. Okay, actually, you have the exact same line, but you haven't drawn it as a channel. I have drawn it as a channel as well. The break we had yesterday below the 200 DMA and the trend line support that you have over there is extremely. Now, if you extend this channel, you see perfectly. Yes, exactly how I have it in my chart. So yesterday's we initially broke below the ascending wedge, because we're seeing the same thing here, and now we're even breaking below the channel of the 200 DMA. This is the first break we have below the 200 DMA since June 2016, when we only did that for 2 days. So I think the Russell has been pointing lower since some time now. And the rest of the indices are following. We don't yet have, as you very well said, some major breaks in the major indices like the Nasdaq or the SPX. But on the other hand, we have seen the SPX breaking below a major trend line. And if we actually test the 2,400 level and that gives way, then we're talking about a totally different game. So we're not there yet, but seeing all the headwinds that you just mentioned, I would be extremely careful.
Yeah, there's it's the break in the Russell. I mean, the Russell's it's a pretty. I mean, it's a broad market mid cap stock indication. I mean, you're
mainly domestic.
Yeah, mainly domestic. You're seeing, this is a really, this is a big development as far as I'm concerned. And I'll tell you, we have a few stocks that have been, generally speaking, holding up the rest of the market. The Apples and the Googles of the world, and there's and a few standouts, but you've got a really big major index that's taken a little bit of a spill. Hey, just really quick before we continue on this conversation, and the dollar Canadian, we should probably watch it. we have Canadian data. It's really, I have no Canadian exposure at the moment, but we have CPI, inflation data coming out of Canada, and I'll tell you, the Canadian actually hit me this week. I was playing this inverted cup and handle, or cup and handle, not inverted, but a cup and handle, and I was playing this.
It still could be.
And yeah, so I extended out here, and it might actually still be. You're right. It could be, and maybe it just didn't develop that handle long enough. But really, we got to get back above 127, and then obviously above 127.60, 80, for it to become, you know, really bullish here. But anyway, I think we need to pay pretty close attention to it. We do have inflation data coming out, and so we are expecting a little tick higher of Canadian inflation. If we don't get it, the dollar Canadian could be back above 127, I would think, and then we got to start being on, you know, lookout for a bigger move here. And we did pivot off the 50% retracement, but when it broke through, I took a hit in this personally, and then we had a pip or a pattern in play that once we broke through that trend line, I had to take it off the table because it obviously didn't play out. But we did get a bounce from the 50% retracement, and this might be a longer term pattern in play. But we did put another one out there, which is the Canadian yen. And the Canadian yen, you'll notice that we had this was a bearish engulfing candle right here after this rally, bearish engulfing candle, and it's already yielding some downside. So the Canadian could, based on the dollar or the Canadian yen, I mean, we could see some further downside, especially with gold as strong as it is today. So we'll keep an eye on these on the Canadian. We got about 3 minutes.
Steve was also way ahead of the curve on the Nikkei top. And that looks as or more vulnerable than the Russell. So that was a great call, Steve. You were warning people before we started rolling over.
Yes, thank you, Dale. We were just monitoring, the technicals there, and as we had said, this coiling price action could resolve in two ways: either breaking above the triangle, which would be a false move, because then we would find the ascending wedge resistance, which was very close, and then roll over, or simply break below the triangle and break the support of the ascending wedge, and then it's a totally different game. And when Blake is away, we will show the Nikkei, because the Nikkei not only broke below the ascending wedge, but it actually perfectly retested it 2 days ago. And now is rolling over again. So I remain negative on the Nikkei as long as this wedge is now acting as resistance successfully. I have no reason to look higher.
Yeah, the Nikkei is actually, and I know I just tweeted it out regarding the Nikkei, but everybody's got to be watching that. If we come through the 200-day moving average today, that will be a pretty bearish event.
I'm sorry. Go ahead. I'm sorry.
No, I was going to say, if you're not noticing that the U.S. equity markets are getting a little bid here, but the Nikkei hasn't rallied at all. Surprisingly, the Nikkei is really still holding under some pressure here. All right,
talking about what hasn't rallied much, weren't you surprised, Blake? I know the bonds were up yesterday, but it was kind of feeble.
Yeah, well,
with the S&P down 30 handles.
Yeah, but also keep in mind the bond market is right up again. Yeah, if you look at bonds, you look at boons, they look poised to rally, and that's because the market is short.
Okay.
And we can talk about that here in a minute, but and the bond here. Hold on. Whoa. Okay, that should be strong inflation data out of Canada. Well, maybe not. Yeah. Maybe the print was strong. Oh no, here we go.
No.
Yeah.
Throw a market over it.
It's coming in line. Looks like. but the dollar Canadian's under a little bit of pressure here.
Yeah, guys, do not throw market orders into the Canadian right now.
Yeah, so it came in
So they
line.
got the stops. They got the stops from yesterday.
Right, but it doesn't look like it's going to be much of a reaction here. I mean, just
Maybe
yeah, in line with expectations. I'm looking for the trim number, not really seeing it. Maybe that's the one that's moving it. It's basically in line. Then the Canadian's firming a little bit, so you can see the dollar Canadian slumping a little. So just and the Canadian's really been outperforming. The Canadian's been outperforming. So we have fallen about 40 pips. Let's see here. I don't know where we're going to find support. This is intraday. We went through the 618. Yeah, we might find some support around the 10 level, but we'll see. I don't think there's a whole lot to do here. Not a whole lot to do. But anyway, Steve, okay, so you noticed the Russell. What else have you been looking at? What do you make of the precious metals here?
Listen, obviously gold is testing like a major level. There is no question about that. This is the third time since April that we've been testing the 1,295 level. Okay, let's call it roughly 1,300. Let's give it some leeway. I think there is no doubt that a break and close above these levels definitely constitutes a major break higher, and it's a game changer. On the other hand, okay, that's a little dude saying baba. Now
he said buy. That's what he said.
Buy. That's what he said. Okay, give me 1 second to put it in order. Yeah. On the other hand, silver is doing the exact same thing, but it's obviously lagging. I mean, it is testing a major resistance zone, which is 1720. We had seen this zone before, and they had warned that this zone might reject price action lower. But as it seems now, we're retesting it again, and from what I see in the chart, I would expect that this time, we're going to penetrate through it. And if we do, I expect that the next zone that will provide resistance is 1775. So we have, we have some room to move higher for silver as well. So I'm definitely not bearish the metals. I remain neutral for the moment, but if we get the break in gold, I'm more positive at the moment silver, because I wouldn't want to be obviously long gold exactly on a resistance, although I believe that this time we might penetrate through it. I wouldn't know where to put my stop loss. But on the other hand, I think they look good. They look good. They definitely don't look bearish.
Yeah, so and one of the reasons why silver would be underperforming gold at the moment is because gold probably has more of a bid due to the risk aversion that we saw the last couple of days. So
plus North Korea before that, and it's still not a risk that has completely gone away. It has just abated temporarily, but I don't think that the North Korea issue is completely out of the docket and fixed and done. I doubt that we're going to have something major there, but you never know. You never know.
Right. Well, Steve, I'm going to pass it over to you if you're ready, and this way traders can see some of the other things that you might be looking at.
Definitely. All right. And we can go through several. I see we have several questions. We can go through them. Okay. Let's.
Yeah, Ronit has a very good perspective, and I saw a chart of the financials, the banks, and they really never caught fire. And Deutsche Bank is collapsing again, but even the U.S. banks under pressure looks like they could negate the Trump rally right away. What's interesting, Steve, is on CNBC, a lot of these guys, Nigerians, all these guys that they have on fast money, they believed that the Trump agenda, after seeing what happened with healthcare and everything, really wasn't in the market anymore. So it's, it's interesting that some people think that, he won't get tax reform, but maybe a tax cut, and and the repatriation thing is something that could go through it, and that's not in the market, that you'll get a pop if that happens. So, a lot of people felt that the market was traveling on earnings much more than the initial stage after the election on optimism over Trump. So,
listen, Dale, a bullish market, as we've seen plenty of times before, a bullish market will always keep finding excuses to run. When earnings are weak, the excuse is going to be something that has to do with future expectations.
right.
When earnings are strong, the excuse is going to be as simple as earnings are strong. When valuations are high, we're going to be talking about new paradigm and why things are different this time, and why the valuations can remain high or even go higher this time, oppositely than it happened in the past, etc., etc., etc. And at some point, suddenly, there is an excuse, there is a reason, or whatever happens, or there is some kind of chain of events that leads the market to, to wake up and abruptly realize that, everything is the same. And when valuations are really high, the thesis of buying to hold is simply nonsense, because that's only going to guarantee that your future results are going to be very disappointing. And rinse and repeat, and then we're going to plunge and rinse and repeat, and that's what's happening again. In the 1999,
bottom line, trade the charts.
Exactly.
And then you don't have to try and figure out. Let the reporters, let them explain what happened after it happened. Use your charts and no Stravulgi to trade it profitably.
So let's have a look at a few charts that we had a look to before I left, and I haven't touched them yet. You remember the Dow Jones? We were very very clear here that the market would very, very soon, it found it one day later, would find some kind of a top and then correct lower, and we had said that this overthrow above the ascending wedge and above this major channel, would lead perhaps to even a correction to at least retest this red channel, which is like within the big channel. So as you see, this has started playing out. If this is the beginning of a deeper correction, obviously we are still at the very, very beginning. So this is what we had drawn, and especially given yesterday like was it was a Marubozu black candle. I mean, this is a gap down, a Marubozu black candle. I mean, these kind of days, this kind of price action very rarely leads to to something good for the bulls, at least. So be very, very careful if you're long stocks, honestly. The Dow Jones says that. The IWM that we had a look with Blake before says the exact same thing. The Nikkei, if you have a look at it, here is the wedge I was speaking about, and the retest of the wedge says more or less the same. The only indices that haven't yet broken are the SPX, which has broken like this ascending wedge, but as I've said plenty of times, as long as we remain above 2,400, anything can just be considered like a minor correction, nothing more than that. And the Nasdaq, which we warned that this is a bull flag and we're going to go higher. We did go higher. This can still be some kind of a consolidation. We did have two huge sell-off days, which I'm not erasing. I mean, in a healthy functioning market, these would lead to more of a sell-off, but in these kind of markets, you honestly never know. I mean, now that we have players like central banks, etc., buying billions and billions of stocks to support, the risk sentiment, etc., you can never tell for sure, because these markets are more or less indirectly or directly manipulated. I mean, in the usual stock markets, you never had until a few years ago central banks printing money on the electronic press and just simply bidding everything. This is a whole new game. Anyhow, you should be careful regardless. Okay, some indices are already showing some major technical breaks, and some others are on the precipice of doing something like that. So be careful, and at the moment I would more or less be looking for shorting opportunities than the exact opposite. Also, given the fact that we're in the middle of the summer, that there is a lot of political events and risk on the table, that the ability of Trump to deliver, as we said before, has been diminished quite a lot, etc., etc., etc. So be very careful. We already talked about the metals as well. This is what we had shown for silver. I haven't changed anything on the chart. This is what we expected when we were down here. We expected a test of this. When we broke above it, we said that we might test this and then pull back. We've done all that. The next level, as I said before, is this, reaching the 1775 zone. Now, having to do with gold, this is a major area, and a break above there might even help the metal accelerate higher. There is no real resistance until 1335 if we break above 1300. So you should be very, very careful if you want to be short here with a very tight stop loss. I understand why, because there is the reward to risk ratio. But if we actually close above this zone, you don't want to be short anymore. Honestly, you don't. I mean, it's going to be extremely dangerous. Now, having to do with one of the questions we had before is what happened with palladium. I remember that when we talk about palladium, Jess is asking about this now, but I'm not sure if it was with Jess we had this conversation. We were up here and they said about palladium that this new leg higher is not complete yet, and I would expect a new move higher, then a correction, then another high. We've already seen all that. So this worked according to plan. Obviously, as it seems, we are willing to go higher. Probably my assumption from what I'm seeing here is another retest of this red channel, and that might provide an excellent shorting opportunity, to get us all the way back to 830, perhaps. So a deeper correction from there. So I think palladium is a nice currency pair to monitor for a possible shorting opportunity. If I see any major reversal attempt, anywhere between 940 and 950, I'm probably going to take a shot at it. Okay, so that answers his questions. His question. Ron Nitt has a chart about Eurobonds. Let's have a look at it. Let's see what he's looking at. Okay, almost an ascending wedge you're looking at. Okay, I'll tell you something. What I see about the bonds, first of all, I was wrong with bonds. I was expecting a much shallower recovery with bonds, and this did not prove to be the case. Actually, I think that the bonds are testing major resistance once again here because it's this blue trend line. So I know you're seeing it from a different perspective, but I'm seeing it from this kind of a perspective. We had a major bull run with a clean ABC correction back then in 2015, and as it seems, we're currently in a prolonged consolidation, which definitely has the potential of breaking higher. But no matter what, we're currently testing this major resistance area, and it's also the 78.6 of this move. So I think that no matter what happens with the bonds, we're going to know very soon. Obviously, being long here makes no sense in my opinion. But on the other hand, I have to admit that they look strong. They look stronger than I expected when we had this move lower. I expected like an ABC correction, and when we saw the rejection from here, it seemed like the corrective move higher is already done and over with. And I expected, a new push lower, perhaps towards. I said that the first zone would be, this zone, and the second one would be a retest of this blue support. but you know, the recovery was obviously much stronger, and I'm really curious to see what's going to happen from here. If we get a break higher, then I will have to admit, you know, that you know, the bunds might even be attempting to go for a new high. So I would more or less expect a move above 169. But I
we
need
see the weekly on that, Steve?
Sure.
Hey, that almost looks like we're breaking out of a continuation formation there.
Yes, exactly. In this case, this looks like a continuation formation. Here's the weekly.
And it looks like new highs are might be coming here.
Yep.
Yeah. So it worked off its overbought condition more in time than price.
Exactly.
Back to the breakout.
That's what it seems to have done.
So, you know, that could be about the risk off that we're about to see globally too. And that's going to measure pretty good too, if you take it off the flagpole. Anyway, yeah.
Yep. You see, so you know, I would be concerned at the moment. I mean, we're testing some resistance, but from what I'm seeing here, and if we close higher, it honestly seems. I mean, I cannot be bearish if we get a break out of this kind of a formation, because simply, if you see it on a weekly, this is a triangle. If you see it on a daily,
could this be 4 with the terminal thrust? The next wave might maybe be
it is most likely a 4th wave, because there is where you see triangles. So so that's what I wanted to say, is that if this is a 4th, we should expect a new high, but that is going to be terminal, and then we're going to see a reversal. But until we get to that point, obviously we have a lot of move to run, because even until the point that we test the 3rd wave high, we still have a lot of room to run. Okay, so you know, I was
great
bearish.
Look, buddy. Great look. Boy, did I miss you.
Thank you. So you know,
how about you guys, Face? Tell me you didn't miss this analysis for the last 4 days. Give me a why if you miss no Stravolgi.
I definitely missed interacting with the community, I can tell you that much. Yeah. So despite being you know, bearish here and here, I have to tell you that, you know, I like to be nimble, and I like to adapt with what I'm seeing in the market. So as I said before, I'm now very cautious, because a break higher tells me that this kind of a formation is now complete, and you know, we're headed higher. And as you very well said, Dale, this might also be pointing to this might be just another indication that some risk off might be coming through the markets.
Yeah.
Okay, so this is another reason to be. I mean, the signal that bonds are sending, and this is the treasuries, by the way, the 10-year treasury. So this is another signal that it might be telling us that we really need to be cautious with risk at the moment. Seasonality also doesn't help, as Blake mentioned before. You know, it's very well known, you know, that summertime is not, you know, the ideal period to be, you know, long risk, especially when risk has run.
It reminds me, you know, a lot of people say, I'll go away for the summer, but you know how many important turning points have happened in August? I'm old enough, Steve, to remember August 1982. That was the liftoff a couple years after Reagan was in office of the great bull market from 720 Dow. I remember because I was short IBM near the bottom there. And then August in 87 was an important high before the crash. So August, and it looks like we have another August high in the making here if we start getting some confirmation. And, you know, 25 years, this is like near the 25-year anniversary of the bull market. You know, I don't know if 25 is a big number, but that's a bull market that's over a generation old now. So, you know, just to have a correction, I mean, even back to, you know, 1700, which would be, I think, 38% back of the whole bull move, or back towards 1800 last year. But, you know, don't poo-poo August. August has marked significant turning points before, and it may be doing so again.
I have to agree with you, and so I don't forget, this is the USD CAD. I have not touched this chart since we drew it up here.
Yeah.
You remember how many times I talked about the USD CAD and that I was expecting a rebound of some kind.
Right.
And I warned plenty of times that, in my opinion, you should not get trapped into buying initially, because the first reaction higher is going to be a bull trap. Obviously, it's very easy for this to prove a more complicated correction and, you know, get us all the way back to 130. So, you know, as an alternative, I can tell you that we can easily see something like this happening and then getting the next leg lower. But I can tell you one thing for sure. We are going to see new lows. End of story. I mean, give me a paper and I'm going to put my signature on it. We are going to see new lows. Okay. I can't be more clear than that. In my mind, it's more than 90% chance that we're seeing new lows here. It's a good chance that we've already seen a short-term top, because this was a perfect level to see it. There is a chance as well that we're going to find a low somewhere there, make another push higher, and then go to new lows before we get a deeper correction. But I would not be long the USD CAD, end of story, to hold in the medium term. I mean, for you people that might be scalping or whatever, there is always, for scalpers, there is always a binary market out there. During the same day, you can make money being short and you can make money being long, you know, a specific instrument. But for me, that I'm a medium-term trader, you know, the USD CAD, I can only view it as a short at the moment. Okay, so I just want to remind that, because my thesis hasn't changed at all. And this is the USD NOK, which, if you remember, I had said the exact same thing. And we found the top here exactly what we expected, which is the 8 level. What the hell is the 8 level? The 8 level is a level you don't want to mess with, because it's a level that supported the market for 2 whole years. So, you know, a level that was actually supporting the market for 2 years has now rejected price action, you know, as resistance. And I would totally respect that. I would totally respect that. I would not be long the USD NOK at current levels, no matter what. Okay, let's see some more questions, because we have a lot of them. Thank you all. Bullish gold mean bullish Aussie USD. Yeah, okay, I understand what you mean. The correlation is indeed strong and high. And let's have a look at the Aussie USD, and let's simply say that. I remember even the last day before I left, Dale, I think I stressed out plenty of times that despite having seen plenty of days that were negative for the Aussie USD, the price
had a slow grind.
Yeah, it was a slow grind, and slow grinds are never impulsive. Impulsive moves are boom, you know, they hit you in the face. This was nothing like that. So, you know, I'm watching this trend line, you know, this descending trend line. This is not a channel, actually. This was not a bull flag. At least it was not a perfect bull flag, because if you clone this, you know, you'll see this was not a perfect flag or anything. But simply speaking, this looks to me like a bullish consolidation. So first of all, I didn't say that I'm bullish gold from current levels. I'm saying, though, that it looks good, and I have to admit that. And it tells me that it has a good chance of breaking higher this time. So I'm not exactly bullish, but I wouldn't be short. And if I was short, I would keep a very, very tight stop loss from here. But having to do with Aussie USD, I more or less agree with you. I have no reason to be short the Aussie USD from current levels. Of course, this was a level of support resistance, 79.60. So yes, you can say I'm going to be short against this level, and at least you have a measured risk to reward ratio. But from what I'm seeing here, and from the reaction we had 2 days ago, because this candle here is a very bullish candle, especially in an uptrend, I would be very cautious, very cautious. I mean, to me, the chances of a continuation for at least one more high from here are much more than a collapse lower. Okay, so I have no position in the Aussie USD, but if I had to have a position, it would be long at the moment. The Kiwi, also held a zone here. I will admit that the Kiwi did show much more momentum to the downside. So, you know, I would rather be long the Aussie USD than be long the Kiwi. But even the Kiwi, if you see here, we had this important trend line, which we did hold, and we also held this horizontal zone. So even for Kiwi, I would be very cautious of being short here. You know what I mean? I would be very cautious as long as we remain above this 72.20 zone. Any buys for cable? Let's have a look at the cable. Okay, I think that everybody that has attended, you know, this webinar remembers that first of all I had warned that this is an ascending wedge, and I said that a break of this ascending wedge is going to have to find the first support at the 130 level, which I do not think it will hold. I stressed plenty of times that I think this time, on a collapse of this ascending wedge, the 130 zone is not going to be enough of a support to hold the price action. And I thought that 128, one way or another, is going to be tested. We have not tested yet the 128 zone, and not only that, even if you see on the daily chart, this kind of price action that we see here is a clear indication of a bearish consolidation. So what do I think about the cable? I think that more likely than not, it's not done. It's not done dropping. So if you went short on the break of the ascending wedge, you know, good for you. I would still be holding, and I would probably have moved my stop loss, you know, above this consolidation. So I would probably have moved my stop loss at somewhere at 130.
We were short on the throwover up there, Steve, in the room.
Yeah. So on the other hand, would I be long now from here? No, I wouldn't. I know that this is the 61.8 that we've been holding, but from the price action I see here, I think that the 61.8 is just stalling the price action, and I think that another leg lower, at least one more leg lower, is in the cards. So I'm bearish. I was bearish here, and I remain bearish the cable. Okay, that's what I see in the cable. Thank you for your comments, Zach, and everybody else that you missed me. I missed you too, guys, honestly, and girls. Deutsche Bank, let's see what Ronit is in DB. Oh my God, I know so many people that have been burned with Deutsche Bank, you can imagine. Oops, what did I do? Let's see. Let me see again.
Who's the monkey?
Okay, let's see, DB.
Yeah.
Okay, let's have a look at it.
So they have the biggest book of toxic derivatives in the cosmos. And whatever happened to all the toxic derivatives on the books of U.S. banks? Did they just have to, you know, have they been cleared? Are they sitting there? Yeah, maybe we get a, yeah, maybe a, yeah, nice look.
Who knows? You'll never learn the truth about that. But I can tell you one thing for sure is that obviously whenever you see a chart like this, you know, this is a very bearish chart. I mean, this Deutsche Bank has been destroyed, and as you see, you can see plenty of triangular consolidations that each time they break lower. And this, you know, there are two interpretations that you can extract from this chart. One is that you can say that this is, you know, this was another consolidation that is breaking lower, but on the other hand, there is still a possibility
that it puts in a higher low. Yeah. Mm-hmm. Right. Yeah, but it could even take out that low and still be a right shoulder.
Yes, but if this is to become an inverted head and shoulders formation, it has to turn higher now. I mean, imminently, very, very, very soon. Otherwise, this right shoulder is not going to be a healthy right shoulder anymore. So, you know, if you believe in the bullish case here, you need to see a reaction higher, and you need to see a reaction higher
next
very
week.
soon.
Next
Yeah,
week.
very soon.
Yeah.
Very soon. Otherwise, the bearish interpretation, which should always be the main case scenario when you have a bearish chart, points to new lows. Okay, so if you want to be bullish, you would rather wait for some confirmation instead of, you know, going long and hoping. And what would be another confirmation? It would be to see a move higher, a retest of the neckline, and finally a break higher. So, you know, when you have such a bearish price action, you would rather lose some of the, you know, some of the bid here,
And you have confirmation.
and have confirmation and go long, let's say at a break of 21 and, you know, a little. And trust me, you know, if that's the case, then you can expect, you know, what was this low? It was 11 to 21, roughly 10. You'll have 10, you know, you'll have, you know, 10 euros of upside. Come on. I mean, this is a huge trade. So, you know, if you want to be long, just wait for the completion of the inverted head and shoulders formation and go long there. And,
Okay,
you know, you have an excellent reward to risk ratio.
I have to stop you.
Okay,
Because Todd Bubba Horwitz is in the house, my Chicago brother,
perfect.
for our interview.
Perfect. One little thing, you remember Amazon?
Yeah.
I haven't changed the chart. This is what we were seeing with Amazon. We talked about the overthrow. So this is one of the reasons that we're turning lower.
Yeah.
Be very careful with Amazon,
Yeah.
the support of the ascending wedge, because if this gives way as well, you know, things become, you know, this becomes a totally different game afterwards. Okay.
Yeah, and you know, before when it was trading near 1,000, Nick had a big round number rule, and she was talking about going to 1050. So
Yeah,
pretty
she got
close.
that. She
Yeah.
got that. Yeah.
Yeah.
Actually, if you think about it, Nick was absolutely right, because look at this, Dale. The highest daily close we had was 1,053.
Yeah.
Because then the next day we did jump higher, but we never closed above there. Never.
Maybe that was earnings. All
So
right.
yeah. So actually, she nailed it.
I'm used to her doing that.
Yeah. In a closing basis, she nailed it.
Yeah.
Okay.
Okay,
enjoy
brother.
the interview. I know we
All
have
right,
many more questions.
great to have you back, Steve.
I'll
Look
be here
forward
on
to-
Monday so we can go through them.
Okay, yeah, look forward to collaborating with you next week. Everyone stick around for Todd Bubba Horwitz. Todd, I'm going to make you the presenter. And I'm not sure if you want to share your screen, but at least I'll hear your voice. I want to welcome you to ForexAnalytix Community Experience.
Okay, so.
I hear you, Todd.
Okay, and I'm just setting up my.
Oh, okay. You are going to share your screen.
Yeah, I don't care.
Okay, brother.
I share everything, baby.
Yeah, you know what? That's why you're here. You have a giving spirit. You know, I tweeted, Todd, that you and I have a couple of things in common. Of course, the first thing is we're native Chicagoans, and you're still there. And the second thing is that we both host shows and interview people. So that makes a third thing. Let me ask you this. Part of the reason for me going to the other side of the mic was for intelligence gathering for myself and my followers. Was that the same motivation for you to have a show and interview people, that it gives you an edge and anyone who follows you an edge to hear from others besides yourself?
No, absolutely. And I want to make sure that, you know, people hear different points of view. You know, you and I can be, you know, who we are, and you know, you build a point of view, and I think it's good for everybody to learn and see other people, because there's different views, and of course you and I know that's what makes a market, right? And so
Yes.
it's good for people to see the different things that can happen over time, and that's why I love to have, you know, even if I don't necessarily agree with them, I let them come on and I let them say their piece, because again, that's what it's all about, I believe.
It's fun too, isn't it?
Oh yeah, no,
I mean, it's funny. You get to meet people that normally you wouldn't, and you know you're helping them by giving them visibility that maybe people didn't know them. I mean, I don't always interview a famous guy. I may interview someone that has 600 followers, but fame doesn't equal talent. You can be famous and incompetent, and you could be unknown and be a diamond in the rough. So,
for sure.
one thing I did want to ask you, I don't recall, I do believe we did this when I was on FX Street, but how did you get into the business? Did you go directly to the floor, Todd, or was there a long and winding road that took you into the business? I know a lot of people in Chicago, they'll start off at the exchange, like I did as a runner for Dean Witter. What was it like for you? When did you get into the trading industry, and who were your influences?
Well, actually,
taught you the game?
I had a interesting childhood, I guess you would say, and I kind of grew up fast and did a lot of things, shooting pool, hustling, and playing cards and all that stuff as I was very young. And I decided to get a job when I was still a senior in high school and went to work for Pitney Bowes as a salesman. And I worked there. I worked with them for about 3.5 or 4 years, and I wanted to be promoted. And they said, "Well, you're too young." And I said, "Well, go." The words I used. And I went down to the floor. So I went down to the floor, and I knew a couple guys that were down there, and I said, "Okay, let me try this." And I started in 1980, and I started the SIBO in 1980, and became a trader right away. I started trading in Superior Oil, the big T-Boone Pickens play back in those days, and.
So did you get someone to back you, one of your buddies? Did you lease a seat and start trading?
I bought them. If you remember, I bought the mini seat originally, and I put my own money up. I put my own money to begin with. I never had a backer, and then I went into the OEX when that started. We used to be on the old Board of Trade building when the SIBO started,
right?
And the OEX went into the old bond pit, and it was right by Superior Oil, and they were lined about the aisle. You were trading down the aisle in that place. It was so busy. And of course, that was the seat. And I originally started out renting. I was leasing a seat for like $8,000 a month in 1983, which was, obviously the numbers were mind-boggling, but the numbers you could make were mind-boggling. And it was a very busy, great trade, and at one time was the busiest pit in the world.
So, I have a belief that a lot of guys in the pit really didn't know how to forecast, what we're doing now and saying, well, I'm negative, I'm looking for this and that. They basically traded off paper flow, and they weren't directional. So they really didn't have trading skills as people know it today, being there for a swing trade. I mean, they're in and out. You were probably in and out of the market 400 or 500 times a day. Am I correct? And did you notice the same thing, that a lot of guys that made a lot of money filling paper, trading against paper, they really didn't know how to forecast or trade a market. They just knew how to basically arbitrage between locals and paper.
We knew how to grab an edge. I mean, look, you're trading. It still holds true today, but we didn't use charts. So you didn't have time to look at a chart. You were on a clock, that was megaseconds long, or milliseconds, and you didn't have time to think about it. You knew you had to price the order, make a market right away, and take the other side. But the advantage you always had was you were buying the bid or you were selling the offer, and you were trying to arb that in between. And of course, as the business became more sophisticated, and especially when you were trading products like the OEX, you were able to then arb it against the S&P 500. So it was a way to trade it. So all you had to do is grab an edge on one side. Now I particularly traded a lot what they call boxes back in those days. They were $5 option spreads that you could put them on. If you could buy them for 4 3/4 or sell them for 5 1/4, you're making $0.25 immediately on the trade, basically. And I trade. In my heyday, I was probably trading 20,000 contracts a day, back and forth between them. So, again, you were trying, you're squeezing it out.
Those were the good old days, Todd, that was when market makers would make an eighth, a quarter. Was that the spread in between most of the instruments that were traded there?
A 16th and up is what we traded, and obviously we didn't have these ridiculously tight markets, which for market makers are not good. But you know, it was any option below $3 could trade in 16ths. Anything over 3 had to trade in eighths, and when they got more expensive, they traded in quarters.
And you know, that's tight compared to how it is at certain times in the market without open outcry. I had Alan Farley on, and he talks about some of these FANG stocks that after the opening, when liquidity goes away, spreads are a few bucks.
Oh yeah, no, it's really challenging, and that's one of the things I like to teach, and you know, make sure people understand. You know, there's understanding what the market makers are doing and understanding how it works, and that's why the value that you can learn, for example, in options, you know, most people don't understand that you can actually use the stock to place in for the option if you're trying to exit a position, but the market makers won't let you out, right?
Yeah.
You can actually use the stock. You know, if you've got a big position, you can exit through the stock and then just exercise and take your money there without having to deal with it. Because we know, like, for example, today's an expiration Friday.
Right.
We know one thing for sure, that the at the money options or the in the money options will be trading in a wide spread, but they'll be buying below parity and selling above parity, where if you just know how to use the stock, you just get out at parity.
You know, talking about fractions, it reminds me of a joke, Todd, that this father and son were having dinner, and the son was playing with a quarter. And, you know, he's chewing on it, putting it inside and out of his mouth. And his father said, you know, son, be careful, you know, you could swallow that and choke. So the father turns around and, you know, his kid is choking on a quarter. So, you know, he's trying to give him the Heimlich maneuver, trying to save his son's life. And some guy gets up from another table that saw it, walked up to the son, kicked him as hard as he could right in the nuts. And the quarter popped right out of the kid's mouth, saved his life. And the father was so grateful and said, "Oh, doctor, thank you so much. Thank you so much for saving my son." And the guy said, "I'm not a doctor. I'm a market maker."
Right.
Anything for a quarter, right, buddy?
Anything for a quarter is right.
And you did get kicked in the nuts to get it there sometimes. I know it was really a zoo in there. So why don't we get to some of the markets? You know, I've been on your website, Todd, and, you know, I want you to show it, and I've read some of your stuff, and, you know, what you're in the camp that this is, this recovery is much more of an illusion than reality because of your take on the Fed, et cetera. And, you know, August, I was talking about how August at times have marked very important turning points on an intermediate term basis in the market. Where's your head at in equities after yesterday's sell-off? I see you have the NASDAQ chart up.
Well, I just had the NASDAQ up. I mean, I was listening to the gentleman before me, and he made a lot of good points, but I called the top a couple of weeks ago. Now, that doesn't mean that you can sell it. It just means I didn't think we were going much higher, which is good. And now the action you're seeing here, if you just look at the NASDAQ, these big sell-offs, I'm looking for the rally to fail, which it did fail, which gave us the next big sell-off. And of course, I think if this now, you'll probably see maybe even a little rally today. We're up a little bit higher now. And if this fails, then again, that would be an inclination to sell it. As long as we continue to make lower highs, I'm going to be now selling rather aggressively. And if we can get volatility to come back in the market, then that would be even bigger. Obviously, you know, as a market, I mean, I trade futures as well, but as an options trader, it's huge to have volatility. Without it, it's very challenging to be able to do anything. And of course, with volatility, you change.
Yeah, you get more because you do a lot of writing in options, right? You take advantage of being the house. You know, ever hear this expression that options are like relationships? Most of them expire worthless.
Well, it's all true, but what we try to do, you know, look, at the end of the day, we have to just, you know, put ourselves and let the markets dictate what we want to do, not what we think they're going to do. Now, again, I believe that we're in a huge bubble. That's my personal opinion. But, you know, I could sit there and continue to say, well, I'm right, as they stick them up my you know what, or I can just wait for the right opportunities. And that's what we chose to do, is we wait and look and, you know, get opportunities. And I think, again, like I think today you could have, I've written to my people this morning that this could be a Black Friday. especially now. I'm not too happy that they're already selling off a little bit now. I would have liked to have seen a much higher gap higher on an open that I could sell into, but it doesn't look like that's going to happen.
Okay, and you talked about volatility. I mean, the VIX has been very wild. I mean, it looked like we had a breakout, then we gapped lower Monday. Now we're back to challenging those levels. Looks like volatility may be about to really accelerate here. And, you know, normal volatility, it'll seem high to us now if we're in the 20s, but that used to be normal, wasn't it?
Well, that was believe it or not, that's the 20-year moving average is a shade over 20. You know, we had, you know, when we were trading actively, when you go back to our day, it was, you know, in the mid 20s, maybe 30s was normal, and it was wild, and you had an opportunity. When they squeeze it down to nothing, you know, I call volatility the great forgiver. Without it, it's very challenging. You cannot afford to make a mistake. And of course, listen, nobody's perfect. We're going to make a lot of mistakes in trading, but you don't get forgiven for the mistakes. When there's volatility, you can make a mistake because you know one thing for sure. The market's going to come back to you and give you an opportunity to exit if you choose to take it.
Are you a proponent telling your listeners that the gold market's going to accelerate over 1,300, and do you have a bull case for gold?
Oh no, I have been bullish gold for quite a while now. I've been when we got down to this 1,200 level in July, I felt that my first statement was it has to hold 1,200, and once it held, we started to go higher. I've been now on this case, and last week I do a lot of stuff for Kitco as well, and last week I said 1,260 is the key. If it holds, then we're going higher, and now we're through 1,300. And this morning I wrote that it looks like we're going to 1,330 or 1,340 now. We couldn't break 1,300, and everybody was, you know, distraught. How can we not get through it? But now here we are. We're busting through it. So I think you could go next to 1,330 or 40. But I believe that the whole market now has gone from the bear market in gold to now either a flat or starting to turn bullish market in gold.
Okay. Do you have a clue in the treasury market? What's going on here?
No, it's hard to fight the treasuries. They continue to pound higher here, which is ridiculous. But you know, look, it's the one thing that we can't fight is the free money that has continued to be doled out. The lower for longer. Now they're going to collapse, and I do believe that the bond traders, you know, for those who don't understand, the bond market or the fixed income markets are the biggest in the world. And I believe that they're going to turn these markets around, and they're going to turn the screws to the Fed, because I think the Fed is A, out of bullets, B, they're lost and they have no clue.
So we're talking about the bond vigilantes coming back. They haven't been here. You know, we've had a 20, 30-year bull market in bonds. What do you think is going to be the catalyst? Could it be continued weakness in the dollar and a confidence crisis in the economy, where people don't want to hold anything dollar denominated and they'd rather hold, which is hard to believe, euros?
Well, I think that's one of the things you're seeing now. In fact, that was Draghi said yesterday they were concerned about the extreme strength in the euro, and I think you're also starting to see a lot of this stuff play out, believe it or not, in some of the cryptocurrencies as well, which is bringing in quite a bit of money and quite a bit of value. And you know, I don't know if you've heard or whatever.
Did you embrace them, Todd? Because I could never get my head around it. You know, I like cash, but did you embrace it and able to ride any of this mania?
I did not embrace it myself. I could not be critical of it because I felt that it was viable, and I had enough people trying to explain to me the viability of it, but it did not. I couldn't ever grasp my hand around what if the clearing goes bust. But I didn't say it wasn't any good, and I happened to learn that the technology, the blockchain technology, is unbelievable, and in fact, China and Russia use it all the time together.
Right.
So, and now I'm getting a little bit more friendly towards it, because now the SIBO is going to put together a derivatives product for the cryptocurrencies, which at least then I know if I'm trading it, my money's guaranteed. But I know many that have bought plenty and held. I mean, you know, the bottom line is you bought $10,000 worth 7 years ago. It's worth $350 million right now.
It's unbelievable price appreciation. You know, so maybe what we get, we were talking about it here in FACE, it kind of reminds you a little bit of the .com era.
Yep.
But even after the .com bust, you know, what rose from the ashes that was still there? Google, Netflix, you know, I mean, a lot of, you know, so a lot of them bit the dust. So, you know, maybe this parabolic event plays out over the next 6 months or so, and then we get some kind of confidence crisis in those as well. But I am beginning to believe it's here to stay, and who knows? I mean, maybe it's happening because eventually it's the way the government would want to go. I mean, if we were, you know, if we did what India did and eliminated certain cash or all of cash, that takes away everyone's privacy. So maybe that's where they've allowed it to, this experiment to go on, because that's where they want to go. I know it probably sounds like a conspiracy theory, but it's better than, you know, having 666 stamped on your head. Just go to digital currency and they'll be able to track every transaction.
Well, it's always a conspiracy because obviously the entire market, this whole bull market since 09 has been on a conspiracy. It's been all on lower for longer, cheap money and more manipulation. I mean, the true free market that you and I grew up in is no longer there right today.
It's all central planned.
Okay, so that has changed dramatically. It doesn't matter. It doesn't affect the charts. I mean, the charts are going to be the charts, and we're going to trade the way we trade. But the actual true price discovery model that we're supposed to be on is being controlled by the Federal Reserve. It's because they're standing by it, and the other central banks. You know, it's amazing. If you go back to February 16th of 2016, the absolute bottom of the market. All right, it just so happened that Janet Yellen called Campbell from England and Draghi from the ECB, and somehow Jamie Dimon from JP Morgan bought the absolute bottom of the market on that day after those phone calls. Now, again, you tell me, is it a conspiracy? I mean, again, I think the Fed is way out of their league to begin with. They're not, this is not what they were, this was not the mandate when they were designed. It was not the idea to have them totally do what they were doing. So at the end of the day, the markets will change and they'll always revert back, and we'll have some kind of major catastrophe here. But of course, you know, equity markets in history have gone up 9% year over year, and I don't expect that to change either.
I do recall it was a year and a half ago when we had that bear market going in oil, and we were trading under 30, and you and I had an exchange. I don't know if it was Twitter or our interview, and at that time, I don't know, maybe it was Goldman Sachs predicting $10 oil. And I mean, you were emphatic down there that oil was bottoming. You turned out to be very right. I mean, we had a tremendous rally from 25 to the 50 range. Any view on energy here? And I wanted to ask you this. I've asked a few people. Do you think that there's a good possibility that oil holds up until the Saudi Aramco IPO happens, so that there's more interest in it? So, and
okay.
Do you know when that offering is supposed to hit the market?
I think it's supposed to hit in the market in the next couple of months, but I will put it to you this way. I think my target on oil was 40, but the pattern that's now forming is a little concerning. If this low holds here, then that would indicate we're probably going higher. But I think we're going to 40. That was my target in general.
Okay.
I think that, you know, but one of the things you look at from the Saudi deal is they've tried to manipulate this for almost a year now, and we're down 20% from when they tried to start manipulating it. So that indicates that there's a lot more weakness there. We're coming out of summer driving season, which will take more demand away. And as far as the Goldman trade, you know, one of the things I think everybody should be aware of is anytime that these big bankers make a huge play in the market, what that really means is they're trying to, if they're telling you that it's going way down, they're buyers. If they're telling it's going way up, they're looking to be sellers. This is no different than, you know, the old saying, Dale, on the floor, market goes to size, and they're just trying to put it in so they can put their clients in at the best position. That's my opinion.
Yeah, you know, I was that way anytime I heard what the Chinese were doing. You know, they were selling copper. You knew they were trying to get a better price, or they're buying copper. They needed people to distribute to. They're pretty good traders. Why don't we go to your website, and just so people know where they could find the great content that you provide besides your own analysis, and you know, interviews. You've been able to get guests that I haven't been able to get, and I think I've been able to get guests you haven't been able to get. Maybe we should trade guest books. But, you know, Todd is, as you can tell, he's very good on this side of the mic as far as being an analyst, technical, and his options background. But he's also a great host and interviewer, and he really gets to the point with his guests. He's, you know, we're Chicago guys. You know, we don't dance around. You know, we get right to the bottom line. And so here's Todd's website, The Bubba Show. And is that the website, thebubbashow.org?
Bubbashow.org or bubbatrading.com. It goes to the same place, but it originally started out as thebubbashow.org, and then I got Bubba Trading. But again, I do commentary every day. I do live podcasts. I also do once a week. I do what I call Bubba's Bottom Line, which is a video podcast that I post every Sunday, where you get my opinion of what I'm thinking. And again, I believe in having the guests because I want to hear what everybody's thinking. I got a great guy today that's coming on today. That's a fund manager, an advisor, Mark Yusko. And
oh yeah, I've interviewed Mark. Say hello.
Yeah, Mark's on. He's on. So, and he'll, you know, talk about what's going on, and him and I have the same views on a lot of things. And I believe, you know, listen, I believe in hearing what people have to say, and that's what kind of makes a market. And that's what I'm always looking for, is the ability to get the fair market and find the best opportunity for me and my listeners and for the people that I talk to.
Okay, and I see that picture of you on the floor there, Todd. You guys ever set up any bowling pins down there?
Well, they're going to turn into a
roll a ball now, or what?
You can turn into a health club now. You know, you put a peg to a pits into a little spitz now, right?
Great picture of you and a great conversation, Todd. Thanks so much for wrapping the week. Everyone, I encourage you to follow Todd and, you know, go to his website, and he's got it all. Analysis, great guests, knows how to ask the questions, knows how to answer questions. So I'm a fan, Todd, and you're my trading warrior brother. I want to thank you for being with us.
Thanks, Dale. I appreciate it. Thanks for having me on. Great to be here. And BubbaTrading.com, if everybody needs me, I'd be happy to answer any questions. One
last question. What's your outlook for the Chicago Bears this year?
They're going to suck.
Like I said, Chicago guys don't dance around. Thank you, buddy.
Thank you, babe. I appreciate
it. See you, Todd. All right, guys, that's a week. Hope everyone had a good week. Yes, Rob, I guess I was wrong. Google wasn't around. Remember, don't just count your pips, count your blessings. Good to laugh and have fun too, guys. Ron, I hope you feel better, buddy. I'm sorry about your complications. And I hope that with God's speed, you're back out there. You're welcome, Brooke, my friend, that you're out there running a 10K marathon within the next 12 months. Okay? That God's speed to you, Ron. Craig, have a great weekend. Hardy, nice trading this week. Tom, enjoy your weekend. And most of all, don't just count your pips. Count your blessings. See everyone Monday. Blake, have a great trip.